Hello everyone, welcome back to the channel. Today we're going to be doing a video on my strategy and the concepts I use and just overall concepts that everyone should understand if they want to be profitable. And yeah, let's get started. So the most important thing to understand, the GOAT, the greatest of all time, liquidity or drawn liquidity. So to begin with, what is liquidity? Liquidity is where buy and sell orders rest, where price wants to move to. Why does price want to move towards liquidity? In order to fulfill orders. Why does price want to fulfill orders? In order for institutions to add their orders to make the big moves, right? To make the moves. They're the ones that control the markets. Institutions control the markets. They decide where the market goes. And so just recap, liquidity is your magnet, which attracts price for institutions to fulfill orders so they can make their moves. And how would that look like on the charts? We address that as drawn liquidity, right, or DOL. And how would that look like? That'd be your 4 and 1 hour highs and lows, your session highs and lows, and your higher time frame fair value gaps, which are imbalances in price. And so yeah, that's the most important thing to understand. If you can understand that, you're 80% of the way there. As long as you know where the market wants to move and why the market moves and how the market moves, right? The most basic thing, going back to basics, nothing to overcomplicate. If you understand that, you'll become profitable, right? It's the most important thing. So knowing that, what are my confluences and how do I enter the market? How do I enter a trade? So I look for displacement, which are big candles, right? Candles with a lot of volume towards my draw, not away from it. And fair value gaps. Fair value gaps are my favorite confluence and really the only thing I know. I know about order block soma, but breaker blocks, order blocks, all these things are confusing to me. The only one I really understood were fair value gaps and somewhat liquidity sweeps. But yeah, fair value gaps are imbalances in price. And if we respect those imbalances heading towards my draw, then my draw on liquidity is confirmed. Or if we disrespect it, I'm going away from my draw, then I need to change my bias, reassess my draw on liquidity, vice versa, right? If we disrespect it, a fair value gap, and it's going towards my draw, then my draw is confirmed. Yeah, so on. So, knowing all of this, the hard truth, you guys can follow this strategy, but it will not make you profitable. You need to build discretion, right? If you could solely follow one strategy like a robot, then we wouldn't, then AI and code, right? They'd be the ones fucking taking 100% win rate trades, right? Even computers are wrong. Computers could take over if it was as simple as just following a strategy. You see a fair value gap, enter, whatever, right? You need discretion. You need discretion, and you build that over time, just seeing the market, things that happen, why you took losses, oh, why you took a win, and so on. So discretion, discretion, discretion. That's the most important thing. You guys should choose to follow one strategy, but you need to build discretion with that one strategy, right? So let's see that in the market. How does that look like? Yeah, let's get started. So let me clear that with my drawings and liquidity. First thing to go over. Let's go towards the New York session. So 6 a.m. my time to 6 a.m. Liquidity, your hourly swing highs and lows. Let's mark those. So our Asia low, there's this low down here, right? There's low down here, and there's this high right here. It's not what I want to see. I want to see displacement towards my draws and potential confluences, mainly for value gaps, right? So let's see what happens. Let's go down to the 5-minute. Where are we at? Okay, let's go to 6:30. Which market opens my time? Okay, well, we passed it, but as you guys can see, our drawn liquidity was confirmed. Heading into market open, we have big candles, and with a candle this big, it's pretty much just confirming that we want to go lower, right? So you could have taken an entry towards these draws down here. It's as simple as that, right? And then usually you'll see a retrace towards a gap. Let me show you guys. So we could get a retrace into this gap, and in order for us to go lower here, we will be going up towards this gap, right? And then this would be our confluence. If we respect this and we go low, we go lower, that confirms that these are our next draws down here. While if we disrespect it, okay, let's reassess the charts. Let's see where price wants to move to. If the candles are going to be big, if we're going to have displacement, right? So if we were to disrespect this gap, then we say, okay, we want to move higher. We can potentially find an entry towards this draw right here. Yeah, simple as that. Most important thing to understand, drawing liquidity, drawing liquidity, drawing liquidity, right? It makes up the majority of trading. We'll find another scenario. Let's see. It would be a good example of the retrace. Let's see, let's try going right here. It's a bit of a range. 6 a.m. right here. Okay. 6 a.m. What do we see? Draws on liquidity. Let's mark them. Our session highs and lows. These highs were taken already. Asia high and London high. So those we don't need to mark out. Okay. These draws up here. Right. These draws down here. Now let's say if our bias is bearish on the day, right? We want to seek displacement towards these draws and try to find an entry towards them. And if we're bearish and we see that we're displacing up, okay, it's okay to change your bias, right? You don't need to be glued to your bias. You don't need to be attached to it. You don't want to be attached to the market, right? You just simply analyze it. It's analyzing and applying, right? So let's see what happens. Let's go into market open. 6:30. Okay, 6:30. What happens? We take this draw. Let's see if we want to go to our next draw. Right? Instant displacement towards our draw. So you could have taken a candle like halfway through here. Try to get a 1-to-1 towards this draw. Or maybe we could take a draw towards down here, depending on how this candle closes. But let's see, we might get stopped out here. So you guys can see there's a bit of a wick. Yep. So that confirms we don't want to go here towards this draw. So now we want to go higher. And let's say your bias was bullish on the day. So you're waiting for a bullish move. You see that we're displacing higher up towards our draw. So then we could take an entry midway through here towards our draws up here, right? Our stop loss down here. Let's see. Okay, so now this is a good example of using fair value gaps. We have a fair value gap right here. See if we respect it or disrespect it. If we disrespect it, then we want to move back lower or consolidate, whatever it may be. So we took our first draw and looks like we're rejecting off the first draw. Let's see if we want to go back higher up. And we do, and we end up taking our second draw. And that's our trades for the day, right? So it's as simple as that. Marking out your draw on liquidity and seeing displacement towards those draws, right? That's how I like to trade. That's what made me profitable. I'm around 7 months into trading now. I made my first 10K month this month. And yeah, it's just building discretion, right? You can know this. We could see that there's displacement down here. And put our take profit down there. And then just blindly letting it play through, right? And discretion would involve, okay, we're rejecting right here. It's best to just close the trade and not try to go lower, not try to get greedy. And that's where the discretion part comes from, right? And yeah, simple as that. I hope you guys enjoyed. Next video will be a backtesting video. Try to be explaining it a bit more throughout. Like, I mean, obviously it's not live market conditions, but yeah, just showing you guys my strategy. And yeah, I hope you guys enjoyed. Like and follow, subscribe. Yeah, bye.